Hi, it's Nick Gauci here from Prudential Real Estate. Happy New Year, and on behalf of the whole team here, we wish you all the best for 2026. As we commence the year, I thought I'll dissect some of the key talking points from the property market in 2025 and the impact they'll have heading into 2026 on the local property market. One of the key talking points throughout last year was interest rates. The RBA delivered 3 interest rate cuts in February, May and August last year, providing meaningful relief without establishing a continuous pattern of reductions. As repayments lowered, sentiment increased, setting a more optimistic tone across the local market. As a result, clearance rates firmed, inquiries strengthened, and buyers carried a renewed sense of confidence heading into the market, with demand increasing and the available properties tightening. By the end of spring, the story of 2025 had dramatically shifted. Inflation, which had been easing for most of the year, re-accelerated, catching the market off guard. A 4th rate cut, widely expected for December, soon became highly unlikely. In the space of a few weeks, expectations flipped from further easing to the prospect that interest rates will remain on hold for much of 2026. The second key talking point in 2025 was housing affordability, which formed a big part of the last federal election. Despite improved confidence, housing affordability really didn't get any easier in 2025. Rate cuts shaved monthly repayments. However, this was largely offset by an acceleration in home prices throughout the year. By the September quarter, Australia had entered its 11th consecutive quarter of house price growth. Faced with these realities, buyers in the marketplace adapted. Domain.com.au's search data revealed an increase in search criteria such as granny flat, dual living, and duplex searches, surging in the second half of last year. We expect this trend to continue throughout 2026. Another defining feature of 2025 was the resurgence of investors. Following the February interest rate cut, investor lending grew far quicker than owner-occupier finance. Over just 2 quarters, investor loans increased by more than 20%. Crucially, most of this capital was flowing into established properties, not new construction, which further amplified price pressures. Finally, the government's 5% first home buyer guarantee scheme launched on October 1, with unlimited places and higher price caps, widening access for first home buyers to enter the market. What was interesting is that anticipation of this change influenced buyer behaviour well before it began. The prospect of more first home buyers entering the market prompted some investors and second home buyers to bring forward their decisions, looking to transact before the new wave of buyers hit the market. However, supply was tight in the last quarter of 2025, and there was not enough properties to soak up the increased demand from first home buyers. We anticipate that there will be an increase in the number of properties coming onto the market in the first half of 2026, which will be welcomed relief for buyers looking to secure a home. If you have any property plans for 2026, please reach out for a confidential chat to see how we can help you achieve your property goals.